again, guys, welcome to the Investor Show. As always, this is your host, Prince Dykes, coming to you guys with another great, awesome, magnificent video. But anyway, guys, don't forget the like and subscribe and share button and all of the good stuff. If you give me a thumbs up if you like the video, give me a thumbs up if you think it sucks. But what else I want to tell you guys? Don't forget to check out my podcast on iTunes, Google Play, wherever you can get podcasts or wherever. It's called The Investor Show. If you like podcasts, check it out and subscribe and leave some feedback. Some of them are here too. I put them up on the YouTube channel as well. If you want to check out the world's first investment book for children, West Learns to Invest, the app IABOH, the cartoon, all the good stuff. But anyways, as always, I don't have a lot of time, and I definitely know you guys don't have a lot of time, so I'm going to jump straight into it. So as you guys can see in the title of this video, I don't even know what I'm going to title. I don't even know what I'm going to title it yet. I think I'm going to title it something like, I think it's going to be the stock that beats 85% of advisors or something like that. It's probably higher than that. But anyway, we're going to say 85 to be on the safe side. Now, where would I say this from, or where would I get this from? Well, first of all, think about it. One of the most iconic and most important investors of our time is, Warren Buffett, right, of this generation. And, Warren Buffett has said over and over and over, is the best stock or stock he recommends or what to get into has always been an index fund. Get an index fund that tracks the S&P 500. If you're not familiar with the S&P 500 or index that tracks one of the major indexes, well, before I get into that, let's go into the top three indexes. You have the Dow Jones, you have the Nasdaq, and you have the S&P 500. Now you have plenty of indexes out there, but those are the top major ones. You always hear in the news, Dow Jones goes up, Dow Jones goes down, all the other good stuff. So he's always said he's been very adamant about buy a index fund and just keep putting money into it over and over and over in a month. And a lot of people say that, higher up people in the financial industry that you can hear through some of my interviews and podcasts and stuff like that. Because over time, the market kind of like corrects itself over time. Yes, it has its ups and downs and ups, but if you just keep continuously buying it, even when it goes down and up and stuff like that, historically, you made pretty nice returns. I don't know the exact number on that. Now, one of the things is index funds, cool, right? So S&P 500, Standard & Poor's 500, it monitors 500 companies. It is the benchmark of finance. What I mean by being a benchmark is like any other benchmark. It's the measurement. If you are an investor or if you are anything, you want to measure anything on the market, you pretty much measured against the S&P 500. And the reason why the S&P 500 is held to that regard is because it tracks 500 companies. The Nasdaq does 100. The Dow Jones only does 30. So since it takes the top 500 companies in America and it tracks them, that's usually the benchmark of, not usually, but it is the benchmark of finance. So you always see when you get a mutual fund statement or a 401k statement, any type of statement, it's always going to say it is it's always going to compare to the S&P 500. But let's stretch that. As you can see up here on my screen, I have the Vanguard index fund for the S&P 500, which is VFINX, the little blue, the highlighted blue area right here. That is the name of this index fund. You have that one. You have one for Fidelity, which is here. What's that? Charles Schwab. I think it's just Charles Schwab has one. A couple company has one. This is Fidelity, FUSEX. If you want to go check it out yourself, these are different things you may have, right? Indexes. Now, this is the kick. Now, those are not the symbols that I'm talking about. Don't say, oh, yeah, he told me to buy index fund. No, that's not the symbol I'm talking about. So what I'm talking about is, I don't know, right about 2010, what I see most of them started looking at an ETF. Now, the difference is, yes, all of them track the S&P 500. They do the exact same thing. But this is the outlining difference right here. There we go. Right there. The net expense ratio. All of them that does it. All of them are going to track Apple, Microsoft, ExxonMobil, Johnson Johnson, Amazon. All of them tracking the exact same thing. So what makes one different from the other? Look at the expense, the net expense ratio. How much you are paying for this thing? Most of them pay about 2% dividends. You can see it right here. Boom. Now, right here, you can see what you get in a yield, 1.92 to most of the indexes are doing that. which is pretty low. 0.09 is not bad. But this one here, the one I'm going to give it to you, what you've been waiting for, what you clicked on this for, dun, 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 or whatever noise you want to make. So we're going to type it in right here. And the reason why so far this has been the one I like the most is it's a ETF. It has the same exact performance. You can see the yield, which is 1.9. It tracks the same thing, Apple, blah, 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 all the same exact things. It has the same yield, but look at the expense ratio, 0.05. That is the lowest expense ratio I have seen, 0.05. It's been the lowest I've seen. You're getting the same dividends, you're tracking the same company, but this is an ETF. An ETF is an exchange traded fund, trades just like a stock, and it pretty much tracks the S&P 500. You can put them on the, let's go back to Vanguard's index S&P 500 fund, right? Boom. We're going to look at that, and we're going to go to charts, and we're going to type in VOO, right? Pretty much it's the orange. It's laying right on top of that blue. You got the same exact performance, it's tracking the same exact thing, but one expense ratio is about half of the other one. So you're going to pay a whole lot less if you're getting the same yield, everything. So that myself is like, hey, if you invest into the ETF, now you are in the top 15% of investors, because 85% of investors, financial advisors or whatever, are not going to beat the S&P 500 over time. So why not invest into the S&P 500? Now you're in the top 15% of investors. On top of that, if by getting VOO ETF, you are paying the lowest expense that I've seen so far. If you've seen something different, let me know. But essentially, that's following what the greatest investors of our eras have said. The top people that I talk to have said. Now I'm giving it to you. People write me all the time. Hey, what should I buy? What should I get into? I don't know what to start with. I don't know what to get. I would probably start with something like, hey, why not get a piece of the whole market and just continuously buy it every month? Just say, hey, I'm going to take $100 a month, put it to the side, and I'm going to buy $200, whatever it's trading at. I'm going to buy one share every month. And you do that over 3, 4, 5, 6, 10, 20, 30 years, and imagine where you'll be at. So not looking at the market, turning off the news if you're somebody that's like, hey, and guess what? You're in the top 15% of investors paying a lot less than the fees. I know Warren Buffett was big on index funds, but ETFs came out strong probably about 5 or 6 years ago from what I've seen. So we're tracking the S&P 500, and they charge a whole lot less because they're pretty much a passive investment. You don't have to do a whole lot to track something else. You're not being creative. But anyway, I don't want to be too long, too winded. Something I want to share with you guys. This is the way you can get in front of the market and all of the good stuff. But hey, if you guys like the video, don't forget to hit the like, subscribe, comment, share button. Also, if you want to be a part of my distro, put in the box. Not the box, but send me an email over to info at royalfinancials.com. Again, until the next video, you guys already know what to do. Peace, be safe, and I am out.